I'm here with Ken Polcari. He's with ICAP Corporates. It's such a busy day here on Wall Street. He can't even leave his post, so we're going to talk to him right here. Thanks for taking some time out to talk with us. You know, this is a market that's really moving on the headlines.
Right, and it is, and it'll be an event-driven market really for the next couple of days until it finds some stability from a technical level. It's not even trading anymore on fundamentals. It's trading clearly on every news headline that comes out.
So it's just knee-jerk reaction we're seeing.
On every headline. So something comes out and it's positive, they try to rally the market. Something comes out that's even slightly negative and they just crush it.
What's it going to take to calm things down?
It's going to take a couple of things. It's going to take clarity out of Washington. It's going to take more clarity out of the Eurozone in terms of how they're handling their crisis over there. It's going to take some stability in the macroeconomic data reports that are due to come out, clearly, because the ones that we've seen over the last month and a half have been anything but positive. And so the market is now refocused on that.
Do you have to get that phone?
No, Todd.
Okay, we're going to continue. What about the S&P downgrade of the U.S. credit rating? Does that push us closer to possibly going into another recession?
You know what? I think that we're headed that way anyway. I think that the S&P downgrade just brings to light the dysfunction down in Washington and the need for Washington legislators, congressmen, even the president to get together, to get on board, and to deal with the deficit in this country. Because what we don't want to see happen is we don't want it to spin out of control, and that's really the message that S&P is sending.
What about another stimulus package or a QE3 coming from the Fed because of the downgrade?
Right, and I think, listen, they started talking about that last week when we were in the middle of this breakdown. I fully expect that tomorrow, the FOMC meeting, that Ben Bernanke is going to have to somehow address it because it's out there. People are almost expecting it now. I think it might be a tough sell to get it through, but the fact is, if we keep breaking down like this and macro reports continue to come out negative, I think there's a real possibility they're going to have to do something.
But would a new stimulus package from the Fed have less to do with interest rates and more about trying to get a stalling economy going forward?
It would be much more about the economy. It would be much more about trying to stabilize the economy, stabilize the data report, the data points that we watch every week as they come out.
All right, Ken Polcari with ICAP Corporates right from his trading post.